Hello traders, welcome back to the channel. Today we're going to be talking about how to fully backtest and develop your Forex trading strategy. I'm going to go through the simple ways which I actually do this using, free software only. I guess you will need TradingView Premium, which is around, I think £7 or $7 a month or something, to actually allow you to backtest. But there are obviously ways around this. You could obviously just use the free trial, and then if you like it, then just pay the $7 monthly, or just go back and pretend you don't see the price that's just happened. But obviously that isn't the most ideal way to actually backtest. But today I'm just going to be showing you how I backtest and collect a lot of data on my strategy simply using Google Sheets or obviously Microsoft Excel. Google Sheets is the free alternative, and I find it the best one to use because, let's say I need to check something on my phone, I have the Google Sheets there. On my Mac, I have the Google Sheets. On my PC, the setup here, it's all kind of synced across all the devices because it's just simply on the Google Drive. That is why I use that. So I'm going to show you my spreadsheets. I'm going to show you how I fill them out, how I develop a strategy just by using Google Sheets and collecting data on that strategy. So if we actually look on my WillssFX book, you can see that my strategy does clearly work. This is the past 5 months of trading. I only take a few trades, so that's why there aren't like hundreds of trades in the last 5 months. I've mentioned it previously, I only take a couple trades per month, and that's because I filtered it down so I know the exact perfect setup for my strategy. So I know, okay, if I don't see everything I want to see, I will not enter the trade. Simple as that. And we've had 82% win rate in the past 5 months, which is very, very good if you ask me. So the first spreadsheet I'm actually going to show you is this one, and this is where you're going to kind of develop the overall style of your trading. So the way I've done it is I've added these data validation points. So I might do another video going into how to actually set up all the spreadsheets, but if you're new to like Excel and Sheets, then you might want to just use it without these because it's exactly the same, but it just saves time having to type out all the boxes. But that's just the way I did it to make it a bit quicker for myself when I'm actually filling it in. So we'll go through the columns now. So we've got pair, that's quite self-explanatory. Direction, so this is either long or short, so I'll be buying or selling. Entry day and exit day. This is one part of people's trading which they just kind of neglect. Why would I enter or try and trade a day where I don't actually find any setups? So what I found personally from when I tested my strategy, I was hardly getting any setups on Monday. There'd be trades on Tuesday, Wednesday, Thursday, Friday. There'd hardly be any setups on Monday. And whenever I'm back testing, I'll be like, okay, this trade, I'll line up the date. This was a Tuesday, this closed out on a Tuesday. So when I'm looking back, I can see, okay, there were obviously a lot of Tuesday entries, and of those Tuesday entries, this is how many won. Whereas if there's no trades on Monday, why would you wake up on a Monday, sit at the charts, do your analysis and everything, when based on the last year of results, you've had about 5 setups in the whole year on a Monday? So I kind of eliminated Mondays from my trading. So now I hardly trade on Mondays. Obviously, if I'm doing like a challenge account or something, I do trade a little bit differently, and I just take setups which are quite likely, that do fit my plan. But let's say I'm trading my personal accounts or funded accounts, I just simply won't trade Mondays. It's simple as that, because I found that Mondays weren't showing up in my backtesting results. Stop loss in pips. This is quite good because, or again, people just use random stop loss sizes for their trade. They're like, oh, if I put it above this wick, then if I get stopped out, it's invalid. I do it a little bit differently. So I work out overall, what is my kind of average stop loss size? If I have a bigger stop, do I have more winning trades? Is my win rate higher? If I have a tighter stop, am I getting stopped out before it goes to the target? Things like this. This is what I'm always looking out for. So I found that because I mostly trade GU now, stop loss size is around 10 pips. So if I can't get a 10 pip stop loss, let's say I need a 25 pip stop loss, in my mind I'm thinking, okay, I'm not getting in the trade here because the entry isn't valid. Because if I can't get that one stop loss size, then it's clearly not valid for my strategy. And when we go on to the risk to reward in a minute, you'll kind of see why this is quite important. Highest R, this is obviously just relating to this, so we'll come on to that in a minute. Then we have trade type. And trade type is kind of like my overall bias. So the next one is execution type, so we'll kind of put them together. When you're entering a trade, there's always that one thing that makes you enter the trade. So let's say you have perfect setup, but then how are you going to get into the trade? That's when you use the execution. So it could be a break and retest on a certain candlestick pattern. So the trade type would be a break and retest, and the execution type would be that particular candle pattern that actually allows you to get into the trade. It gives you your valid entry. So I have a drop down menu with my trade types and my execution types. This is simply so I can see, okay, which ones work best together. And the best way to actually do this backtesting is to focus solely on one trade type and one execution type at a time, and see how that performs over a certain period of time, and then move on to, okay, if I mix it up, how does it work with a different execution type with the same sort of trade type? Result, obviously this is just win, loss, or break even, simple as that. So if we put win in, loss in, it will come up there. 1 to 2R, 1 to 3R, 1 to 4R, R. This is where I've kind of made my trading, and it's kind of improved my win rate a hell of a lot. So if it hits a 1 to 2R, I will put yes. If it hits a 1 to 3, I'll put yes. If it hits a 1 to 4, I'll put yes. So on a trade that hits all three, it'll be yes, yes, yes. Simple as that. The reason I do this, I was finding myself in trades, I was in profit, it would be at a 1 to 4, I was targeting a 1 to 7, I'd be up 4%, price would reverse, hit my stop loss. So I was like, okay, I'm getting the kind of the right direction. I'm at like 3-4% in profit, but then it's reversing. So it's either I'm targeting too far, I'm being too greedy, trying to obviously make more profit than the trade is actually set up to actually give me. And it was kind of like I was just losing profit because of this. And especially on funded accounts, if you have this, then it can be an issue. You know, I did a video before on my E8 account where I was up over 5% in profit. That trade then went to my stop loss, and that counts as over 5% drawdown, daily drawdown. So it actually blew the account. So if you're having this issue where you're in a decent amount of profit and then it keeps reversing to your stop loss and it just ends up like a loss every single time, then this is definitely for you. So what I did was I started testing individual risk to rewards. So the highest R, let's say it goes yes, yes, no. The highest R for this trade would be 3. So a 1 to 3. So then overall, I'm like, okay, on average, 50% of my trades, 60%, 70%, any number, for example, is always going to this one risk to reward level, and only 5% are going to a 1 to 4. I just then see it as pointless to then be targeting a 1 to 4. Obviously, there are going to be occasions where you can target a 1 to 4 or 1 to 5, but why would you target extra when based on your backtesting results, you can see that a certain percentage of the time, it always goes to a certain risk to reward. And if it's only 5% of the time, it goes to a 1 to 4. Why target 1 to 4 when you've got 95% chance of it not actually reaching that 1 to 4? I just think it's quite simple. People definitely don't have that in their trading. So moving across here, you can see that we have the before screenshot and the after screenshot. And this is just for your trading view. So if you're on trading view, if I just show you. So we have the GU chart here. And let's say you had a setup you were going to take here. So you have your stop loss, you have your take profit. So you go up to the little camera icon, copy link the chart image, then you go back and you simply just paste it in. And let's say it played out and we made profit or whatever. You then screenshot the trade after, pop that in there too. So then anytime you can kind of see, okay, what was this setup? Oh, that was the setup. There was the before, there was the after. Simple as that. Quite self-explanatory. But over here, this is where you kind of develop the strategy kind of aspect of it. So I set it up so it is a starting balance of 100k, and in the result here, obviously we can see the wins or loss. So you can see, is it a win, is it a loss? Simple as that. Total break even, miss, there we go. And obviously we need this here to work out our strike rate, because there's obviously no numbers in here. There's simply no strike rate because you can't have a strike rate of 0 trades. So if we put a win in here, another win, a loss, you can see that it automatically calculates a strike rate of 66.66%, because you've had 2 winners, 1 loss. I made this by simply just using the count if. So it adds a 1 in here if there is one loss in this column, and it adds a win here if there is one win in this 1J column. Simple as that. So then we have total long and total short trades. So if we put a long in, if we go across here, you can see that it's added one in the long, just using the same countif. Average stop loss size, this is just using, you know, the average of the stop loss sizes which we've put in that column. Then we have the average risk to reward, or the average ROI, just simply in the highest R column. And this is where I find my strategy will work better than other people, because I focus on this a lot more. Monday entries, Tuesday, Wednesday, Thursday, Friday. So anytime I put a day in, it will say 1 in each of the days which I've actually picked. So I can see, okay, I have 20 entries on a Tuesday, 1 on a Monday, 3 on a Wednesday, 2 on a Thursday, and then 3 on a Friday. So I can see, okay, most of my focus is going to be on Tuesdays, because I'm getting all of my entries on a Tuesday. It's having a higher win rate than any other day, so I'm going to focus my time on that one. So next we have the trade types, which is in these ones here. I've blurred them out because obviously that's my own strategy. But if you input one of those into your spreadsheet, it then comes out with a 1 on here as well. Execution type is exactly the same. So this is just my entry criteria to get into the trade. Simple as that. And then the risk to rewards, if it's a 1 to 2, it'll tick here. So you can see which one, instead of having to go through and count, you can pretty much just see it here, which one actually adds up to the most. So this is what I use when I'm actually developing a strategy. So if you see in the bottom, you can see that I've done one for gold, AUD, USD, did a whole month of September doing it, tested just 1 to 3s on GU, tested just GU in London, tested GU overall. And then I also use this spreadsheet here for then after. So let's say I found my entry, I found my trade type, I found the session. So this is when I just test how does it perform over the months. So as you see, I've done January, I've done February, I did March as well, but I've obviously blocked it out because there's no point in you looking at that. So you say win, your risk to reward from the trade, and then your profit. So let's say I made 3K on this trade. I set it up so it just compounds on top. So if I finish the month of January on 120K, it adds up anyway into February as well. So that's pretty cool. Then we have the long short and then the before and after. But what I've done is I've set up the results here, so I can see, okay, just using this strategy, just in this session, what are the results like? So you see the profit target, the number of months I was testing, the minimum risk to reward, the risk per trade, monthly projection was obviously 15%, and then the average month was actually 10,300, which is pretty good. And then if we go over here, I have actually deleted them because obviously they always have errors when there's no data in there. But you can see from just these 2 months, we had 21 trades and we made 20% profit. This one, it doesn't show anything. I don't know. Obviously, I didn't make 0% in 20 trades. That would be pretty terrible. But yeah, 60% win rate on that one too. So if you actually use both of these spreadsheets combined to test your strategy, testing your entry types, testing your trade types, testing different sessions, different days of the week for your entries, you can kind of build up a lot of data on your strategy, when it works, when it doesn't work, and then kind of put that into your live trading too, to hopefully make a lot of money. So if you guys did enjoy, I might try and make this spreadsheet public for you guys to access, so you don't have to make it all for yourself. But if I haven't done that in the description, then you'll just have to make it for yourself. Simple as that. But if you guys did enjoy and found this useful, like and subscribe, and I'll catch you guys in the next video.